welcome back. You're watching Commodity Champions. And Som, I'll start with you first. First number out. What is the organized sector right now? I mean, approximate numbers on how would you categorize the overall market?
That's about 39%. We believe it has run up in the last 2 decades. We expect, our estimation is that it's about 39-40%. It keeps growing. Clearly, that is and eating into the small unorganized players' shares. There is no doubt about it. But Manisha, I just wanted to very quickly jump and probably say this. There are things like ONDC coming where they could, the small jewelers could get a significant benefit, even though they are small. So it doesn't have to be that, if you have to be big to actually survive.
That point is well taken. I also want to just take another step back, Soman. Initially we would have all conversations about how the sector needs to have transparency and then credibility. We've had so many conversations about financial concerns as well as in funding. And then came consolidation, hallmarking. We're talking about growth and expansion and more capital infusion right now. Sustainability also is a conversation that gold seems to be looking at. How are you looking at this growth going forward?
But we have to adopt what the other investment categories are adopting. I don't think we can escape because things around us are changing very, very rapidly. For instance, the point of purchase controls. Far too long the industry has put up a argument that, okay, it is being bought by rural women, you should not constrain them, etc., etc. But if you see, these are actually becoming very archaic because, the same women are buying cars, they're buying mobile phones, etc. We just need to change. Gold at these prices is a very serious investment. We got to behave like we are selling an investment product, even though it is in the form of jewelry. I think all problems will be solved for the industry if we start taking that approach for the next 5 years.
Ashish, what would you say to that?
Yes, to some extent, I agree with Som. And things have been moving at the ground level also, because I would give credit to the government also because they have got the changes in the whole system slowly so that the consumers as well as the small jeweler is slowly able to adapt to it. Like even in hallmarking, we had some period of 1.5 years where people slowly got used to it. And then the mandatory hallmarking was rolled out. And in terms of small versus organized, I think the organized players are going to grow faster. But smaller players will have to focus on their competitive advantage. Being small, they can be fleet-footed. They can offer services which a large chain would not be able to offer, maybe custom manufacturing or whatever. So they'll have to identify the niche that they can perform faster than others. Pricing will not work there. So they have to work towards finding the right niche. That's my sense.
Saurabh, I would also want your opinion on this because as Som says, yes, 6,000 and plus rupees per gram of a product has to be taken very, very seriously. There is an HNI market, then there is a middle class, and there is investors, and then there is rural India, etc. Are you catering to all of these markets as of now?
See, gold is bought across all sectors, be it rural India, be it right from a daily wage labor to, be it a CEO, to be it a royal family. Everyone consumes gold in different forms. I think as Indians, we have affinity towards gold. It's a part of our DNA. It's a sign of wealth, prosperity. So as a retail chain, we cater to the entire line of the value chain.
Okay.
Like So mentioned, we have to be able to address each need separately. Somebody who's a first-time gold buyer versus somebody looking at exclusive gold necklace. There are two different kind of customers with different needs, and we have to understand and be able to service those needs. Be it bullion or be it jewelry. The market is now maturing, and even consumers today are asking questions like, where is this made? What kind of labor goes behind it? What are your back-end facility to manufacture it? What are your warranties after sales? So we also as a market are now evolving from just price and discounts to looking at the entire product, its finishing, the efforts behind that, and after sales. So I think this is a very positive sign for the industry. And as the whole industry is now almost coming to a single price pan-India, which I think is going to be a really soon we'll be seeing one price pan-India. Then the whole concept will shift on labor, on how it is made, machine versus handmade, intricate designs. And this is where you'll be able to extract the maximum value and increase the profitability, and also give unique designs from your house, from your company to the consumers. So I think it's the right time. The market is maturing, and we as jewelers have to understand that we have to have a story behind the product. We have to look
Yes.
at the whole journey, and not just sell a piece of product with the labor and making charge, but make the purchase valuable and let the consumer feel that he's buying a piece of art, something which is mixed with emotions and a lot of hard work.
Point taken. The other point that I want to talk about is the exchange jewelry, and I've seen those numbers continue to increase. So, first of all, you on that number there, what is the kind of exchange number that you're looking at, the recycled gold coming into the market in sense of percentage?
Manisha, 4 years ago when we did a one-time study, it was a sample survey, of course. What we found was the total recycling in India is about 250 tons. And that was a time when gold for cash was about 100 tons. Gold for gold was 150 tons. So it was 1.5 times, even when price was not so high. I wouldn't be surprised if it is probably twice or thrice the gold for cash. That is what I mean is when people come and sell the gold and take the cash away, that is what we consider as recycling. But actually, there is another form of recycling, which is you give a certain amount of gold and then you just buy a little more, but the whole thing is in new form. That is one of the biggest things. I wouldn't be surprised if it is 3 times the normal people selling gold for cash. So it is increasing, and at these prices, we should also encourage it. In fact, you must increase the expand the definition of monetization of gold to see, can you monetize it at the point of purchase? Can we, incentivize people to use more and recycle more and get it all HUID done? Some jewelers have already started.
Yes.
Bring the non-HUID jewelry and get a HUID jewelry in return. So these things should happen and should be an extended form of monetization.
Ashish, what's your sense for every 100 grams of gold that perhaps you're selling or the markets are selling? How much of that is recycled? How much of that is for gold for gold?
See, historically, what we have seen was generally in Western India, about 25 to 30% of the sales had this old gold component of 25 to 30%. But as the prices have started going up, people's incomes haven't gone up that much, number one. And whenever there is any spike in the gold rates, we have seen this ratio going up almost to even 40% in some cases. So currently at the rates being around 60, I think we are having elevated levels of old gold, not sales per se for cash, but exchange into new gold jewelry. And I think this trend will continue till the prices stabilize.
All right. So near 40% of the gold that is being sold is as of now exchange jewelry. Gold for cash as well is also a trend picking up. So those are clearly the numbers there. But thank you, gentlemen, so much for joining us today. It has been an amazing conversation. I have enjoyed it and I hope you have too. Thank you so much for joining us here today on CNBC-TV18. And with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.